Welcome, boys. Quick weekly review of the week number. Let's see what week number it is. Week 22. Quick weekly review for y'all. Let me open up the weekly calendar for y'all. So Monday, no news, bank holiday, not interested. Tuesday, 10 a.m. news, we are interested in that, but price was not aligning. Then Wednesday, we had some EU yellow folder news that made price go crazy, and I'll go over that. Then Thursday we have double news, so we were truly interested in that day. And then Friday we had news as well, so that day delivered as well. That goes to show this economic calendar is truly a cheat code. So let's get straight to it. Monday we had no news. We sweep this and then we finally make the move. I did not participate in this, unfortunately, and you guys probably not either, because we expanded from Asia onwards and then London did not deliver too much. Beside that, Tuesday, London session did also not. Okay, wait. Excuse me. Let's go back. So, London session right here on this pair is already extremely high. The markets are moving in disparity, whatever you call it, not in tandem. So, this took so much liquidity, as you guys can see. We took this rejection block right here. And where's the bulk of the orders, quote unquote, from by the rejection block logic? In the rejection block, its body, and then we reject it. So when we see this happening on Tuesday, obviously you're not gonna long when price is already at such high levels. It doesn't make sense. That's like asking to lose money, basically. We do not long in premium, so when price in a premium, we ignore this quote unquote unicorn time beat, which I don't even see as a unicorn, to be honest. Why did my session indicator disappear? Okay, it's back. Because some people would say this is a unicorn honor. Nah, it ain't G. Look at the timing. And that's what you will notice when the economic calendar is not there. Price will do these random moves at random times. Then we get this double top. You could quote unquote argue that you want to short this because we are in premium. But we have a double top, like equal highs, not double top. Excuse me. I'm extremely tired. Grinded all day. No Diddy. Not that type of grinding. But then we finally displays down and the market drops the high of the week. What does that mean in the model I taught y'all? When we get the high of the week, we can trade retracements into the discount of the range. And what is the discount of the range? This right here is the discount of the range. So I will put the blue line right here. That's the discount of the daily range. Because you could argue that this right here is the H4 range. But higher time frame overrules the lower time frame, so we have to keep everything combined. So let me mark out this daily fair value gap as well. React, high of the week, breaker, find support in the breaker, displays down, and then we go back to intermarket analysis. We see that GU also left the breaker, and then this breaker right here gets retested in London session. You see, look at my mouse, London session, 3 a.m. 3 a.m. we make the high of the day. We tap the breaker. I hope I closed it, okay. We tapped the breaker on GU. So we have extra confluence that this right here will go down, and I'm gonna give you a cheat code. So the market maker model, we look for mitigation blocks for price to mitigate their orders in and then to continue its market maker model. And what do we have right here? A mitigation block. We find perfect support in it. We could mark it out like this, and then we displace down. That's why I was not too keen, like these Australians says. Why I was not too keen to look for shorts from here. Why? Because we already had mitigated it right here. It would not make sense to me Ideally, I would want to see price come here and go down, but it would not make sense when GU is already doing that, because then GU has to sweep the high again, and we had lower time frame confirmation. What was lower time frame confirmation? A unicorn at the key time. No, y'all know I fumbled the AU shorts here. Y'all know I fumbled these beautiful shorts. And it happens, part of the game. But this delivers a beautiful, beautiful trade. Then what happens? We sweep it at New York session. It looks like equal highs actually. Let me take out this. It is very annoying. Interesting. So I guess we just the rejection block. What is the logic of the rejection block? That everyone trails their stop loss, or that bulk of the orders are in the candle its body. So we sweep that and then we displace down. Unfortunately, there was no entry pattern, but if you use the logic of the model, if you use the logic of price, you could argue that you could enter here. And if we go to GU, you can see we have a high, low, low. Sweep this, low, low. This is the block. We close under it, retest. And then this will be like your mitigation block, and then you could enter right here with intermarket analysis. And let me go to DXY. But I did not enter that, by the way. I was not confident. And like how I trade, I know that if my mental capital is not there, I'm going to take a wrong trade. I'm going to take a wrong take profit. I'm going to do everything wrong. So when I missed that AU trade and I knew I was emotional, I didn't trade for the day anymore. Like I can't, because I know I will do something maybe dumb. I just don't want to take the risk. That's just dumb. There was also SMT going on right here, so you had that as confluence as well. So if you wanted to, you could have shorted this from the mitigation block right here. You already know my stop loss thingy. Why would I put my stop loss like this? Propulsion block, balanced price range, fair value gap, fair value gap, fair value gap. Like price should not retrace deep. So if you want to do that, you could have done that and targeted daily equilibrium. Aha, I forgot to mention, we also had a weekly fair value gap, which acted as strong liquidity. But you guys know I had a reversal in mind, and I still think we might reverse because price does not move like this for no reason. So you could have targeted the weekly fair value gap, and now I'm going to drop a gem. So this is the smart money reversal. Wait, am I tweaking out? This smart money reversal, first stage of distribution, and then this is the silver bullet right here. Once you have this confirmation, what was your good trade? This one. Why? Why do you think? Because it's extra confirmation. Like this week was actually pretty nice. Smart money reversal, we don't want to catch that, but first stage of distribution, you can catch that towards, in this case, equilibrium of the daily range, because we are bullish. Low voice crack. So here is the silver bullet for GU. Silver bullet is the second stage of distribution or accumulation. And then we reach it right here. Unfortunately, it did not deliver anything. Maybe it did on GU. Let's check. Not really. That's unfortunate, but it happens. Part of the game, like I said when I explained the model. Do you chase price? No, you let price come to you. So we tap it. And I'm going to be honest. I expected this week to be a reversal. And this right here will explain to you why it wasn't. Using intermarket. Like why I switched my bias to bullish, excuse me. So if we are bearish, what happens? If we are bearish, we want to see a body closure under the low, which we did not get on GU, but we did get on EU. Why? Because Euro GBP was probably weak at that moment in time. See? Let me check. So it wasn't, I guess. But because GU was way higher in the range and a way more longer way to go down, this does not look like a convincing close. So we could conclude it from there. And then if we go to the XY, does this look like a convincing close to you? No, we want to see bodies. We don't want to see a swing high get formed. We want to see closures. We want to see it get out of the range, retest the range, continue. We don't want to see it like this is a sweep. This looks like a sweep. That's how you can tell if it's a continuation or a potential sweep. And then the second confluence. So in London session, my bias was I want to short and price just takes out a few early sellers and then we can go. What happens? We sweep liquidity, this plays through it, retest it right here. We retest the H1 breaker right here. What does that mean? That means that this is the smart money reversal of a market maker model. So what are we expecting? We are expecting 2 stages of distribution potential. So this is potentially 1 stage. So this is smart money reversal, first stage, and this is potentially the second stage. Okay. So if this is our market maker model towards here, see? So when I see the smart money reversal happening, my bias immediately switch like, unlike this ain't bearish no more. So right here, we have a mitigation block. And what have I taught y'all about mitigation block? Mitigation blocks are areas where smart money offloads their positions to continue the trend. Go and test it for yourself. So past stages, so this right here was the second stage of distribution, because this was smart money reversal right here. Smart money reversal, first stage, second stage. Then we come here, smart money reversal. Then we use the previous stage as of distribution as accumulation, and then we continue up. And you can tell that by these mitigation blocks. So use these mitigation blocks, please. Because imagine you waited for price to retrace to the breaker, which does not make sense. Why? Because we have a propulsion block and then we have a mitigation block. Now listen to me. I teach y'all to trade pro trend. I just had to take a sip of my drink. And this is pro trend. Why is it pro trend? Because we retrace into daily discount, swept it one more time. So you could see this as a turtle soup, which maybe will not be a turtle soup, because if it was a turtle soup, this would already have blasted up. It makes no sense. We would have already neutralized these liquidity points, in my opinion. But I think it's maybe going to take liquidity and then, I don't know, maybe consolidate more, or it's just tricking up so many buyers. Like, it doesn't make sense to me. But once we have the smart money reversal confirmation at a key level, then you could look for the first stage of distribution, which happened right here. And if we go to the lower time frames, during the London Open kill zone, so this is calling a bottom. I do not recommend you take this trade. This is just for study purposes. So you can journal it and study. I'm not going to go over it. What I'm going to teach y'all though is my model for New York kill zone when we are closer to draw on liquidity, which we were quite right here. So I was expecting an explosive move. And we have, first of all, price has no reason to come back to this breaker right here. Why? Because trap traders, basically. Everyone that was shorting the continuation got wrecked. Everyone that was, sorry, I was scratching the nose, my head actually. So everyone that was trading the continuation got wrecked. Like all these people right here that was continuing to short got wrecked. So price does not want to come back so they can offload their positions. And you could also see this as a breaker type beat. Why? Because, see? That's why I was quite confident. I'm going to teach y'all a beautiful setup. You take the range. Right here. Do we have body closure? No. So we have body closure on this leg. So this is the high, this is low. I mean, this is low, this is the high. So this is your range. And what happens in the New York kill zone? We get a Judas swing, neutralizing early participants, and then we expect the move. Now, please listen carefully because this is why I have multiple screens. Well, I already have multiple screens due to gaming, but this was my thought process during this trade, okay? And what I'm telling y'all, like, I don't think much more people will teach all this because this is next level market understanding. First of all, breaker mitigation block, so it makes no sense for price to retrace to the like this breaker. Excuse me, I said breaker block right here, but I meant propulsion block and mitigation block. This is the breaker right here. This one. So I want to see the market take out early buyers during New York kill zone in discount. So when I see this happening right here, do you see what I'm hinting at? GU does not sweep when EU sweeps. What does that mean? That means there's SMT, and that means there is something in play. If we go to DXY, let me inverse this so it's easier to see. Do we have a sweep? No. There's SMT going on at a key time. We are expecting manipulation before news plays out. Am I tweaking out? I did not show the wrong one, right? Yeah, I think I showed the right one. So we do not sweep this. Well, now we're back here. Let me show as proof that we did not sweep. We do not sweep, but we do it right here. Just study when the highs and lows of the day form, please. Of the session, excuse me. And then I was like, okay, it was just manipulation before distribution. So if you miss this and you want to enter it, when the candle closes above here and leaves a fair value gap, you can just market execute. Why? Because why would it make sense for price come back? If you understand the logic that I explained to you guys, when we have sweep into breaker pattern, it makes no sense for the price to come back here. Why? Because they're strapped traders. How many people do you think got wrecked? How many losers do you think were shorting this, got wrecked, and they don't have a stop loss, and they're like, please come back, please come back. Nah, G, we ain't coming back. We're gone. And then for my take profit protocols, you already know. And then, am I tweaking out? Okay, and then on Friday, I got wrecked here. So tired, unfortunately. Unfortunately, because it just did not make sense for price to retrace this much. But it was just neutralizing early buyers, aka me. Made the fake Judas swing, SMT with DXY. So this is a mitigation block, then you could enter and target for the longs. And then in New York session, unfortunately, I did not see any setup in this part of the game. Let me go over the week again. And excuse me if I'm stumbling over my words because I'm extremely tired. So this was your high probability trade on Wednesday. This one on Thursday. And you could call this one a high probability. Lesser high probability. But this one was high probability in my opinion. And now I'm going to do the weekly review. I mean, a weekly outlook. This was a review. Hope you enjoyed. Because I sure did. Learned a lot from reviewing this price action. So tired. So in consolidations like these, where price is not making the move, I'm gonna drop a gem. I actually want to make a whole video on it, but I'm way too tired right now. So this is the market maker model, right? In the market maker model, if you have your smart money reversal, you have your first stage. Wait, I did not draw this properly. Let me just draw this. Let's ignore this. So if you have the smart money reversal and then the first stage happened, the second stage in consolidation, you should hunt. If we are not yet in equilibrium, if there's liquidity to take, and you can tell we have a second stage of distribution, go and test them out. That's all I'm gonna say. Those are your nice trades. Go and watch my first ever YouTube video. I go over the second stage of distribution there or accumulation, and you should really study that. Like, really, please study that, please. That's a game changer because that's how I realized that's how I can trade consolidations. Just because of that. It's actually insane. So please go and study that. Have a nice day. Peace.